Deloitte is a very entrepreneurial culture, right? So if you're a partner in Deloitte, you have a lot of freedom in deciding where you're going to spend your time and grow a practice or a business. I was very fortunate to have the right sponsors within Deloitte telling me, you should push for this a few years and see what happens. So I got really good support internally. And I think the market was also there to support our activity. We had clients coming to us saying, okay, what should I do with it? Can I change my loyalty and reward system using blockchain? Can I change my payment system using blockchain? Can I tokenize assets so that I can have more liquid assets?
Welcome to High Stakes, the podcast committed to demystifying the institutional adoption of blockchain technology. I'm your host, Alex Nowaka, and today we're elevating the Web3 discourse in a series of conversations with industry iconoclasts that are shaping the future of Web3. Now let's get started. Welcome back to another episode of High Stakes. I'm your host, Alex Nowaka, and today I am joined by Eric Piscini, who is the CEO of Hashgraph. Welcome, Eric.
Thank you, Alex. Thank you for having me.
Absolutely. Excited to have you on. So Eric, why don't we just start with, your journey leading up to Hashgraph and sort of what initially got you into Web3 more broadly?
Yeah, so I think we have to go back in 2012 when I was a partner at Deloitte in the US, and we were starting to get questions from clients about what to do with Bitcoin, right? That was a very early days. And I realized at that time that the world is going to change because of the technology behind Bitcoin, which, by the way, at that time, we didn't have the word blockchain yet, right? No one was using that word in 2012. So we started investing in that, and then Deloitte has many different businesses. I was focused on the consulting side of Deloitte, and we grew together a practice of 1,200 people worldwide over the following 5 years. So that's been an amazing journey. And I think that's, today we talk about the Deloitte mafia because you have a lot of people who were at Deloitte during that time who are actually now into the industry. After that, I ran a startup for 2 years, exited that startup, joined IBM because an old friend of mine was there and asking me to do innovation for a very specific division of IBM called Watson Health. So we were doing innovation, including blockchain, in the context of healthcare and life sciences. And then 2 years ago, I joined the Hedera ecosystem, and we'll talk about that in a minute, I'm sure.
Absolutely. And a really great sort of arc in terms of the journey in the space and even before. I think most folks are not familiar necessarily with the nuances of what the various organizations are within the Hedera ecosystem. And I know there's been some reorg that's happened also sort of in the last year or so around that. So maybe let's start with like bird's eye view of the Hedera ecosystem, where Hashgraph sits within that ecosystem, and then what its particular charge or sort of mandate is.
Yeah. And maybe I'll start. So Hedera started in 2018. Right. And in 2018, it was one organization doing everything. And over time, the regulatory pressure created the need for decentralization. And today, we have a legacy of that today, right? And the legacy is that we have 4 entities involved into the Hedera ecosystem. The first one is the Hedera Council, which is 33 companies today, big organizations running the node, running the network, right? And think of them as Google, IBM, Dell, LG, many others, right? Really big organizations. They did commit their brand to this project. So they are running the network. That's called the Hedera Council. The second entity is Hashgraph. Hashgraph is pretty much the founding team who left Hedera to create Hashgraph. So that's where Mance and Lehman, the co-founders of Hedera, are sitting today. And the product and engineering and marketing and communication and DevOps and cybersecurity and almost everything that's being done on the network today is done by our team here at Hashgraph. And then you have 2 foundations, one called the Hedera Foundation, which is really focused on activating the ecosystem. So activating people to use HBAR, which is our cryptocurrency. Now, exchanges, bridges, wallets, companies, developers, right? They focus on this. And then we have another foundation with a different mandate called the Hashgraph Association, and they are based in Europe. And their mandate is to activate large enterprise onto the network, right? So two different foundations, both of them with the ability to give grants, but very different targets in the market. So that's the context. So Hashgraph is where the majority of the people are today, right? Which historically that's the team who funded the network. And we have amazing things happening today. I'm sure we're going to talk about this.
No, absolutely. And one thing that I wanted to ask you about, because we don't see a ton of, we haven't seen yet a ton of rebrands that happen in sort of like Web3 native companies per se. Obviously, Hashgraph recently, like within the last like 10 months, underwent sort of a rebrand. So I'm just curious if you want to talk a little bit about that sort of process.
I think, yeah. And we also rebranded the foundation. In the US, it was called the HBAR Foundation. Now it's called the Hedera Foundation. The goal is to be more streamlined in terms of branding. So today you have Hedera and Hashgraph brands in the market. That's much easier. We used to be called Swords Labs, which is a weird name. It meant something very real. It meant shared words. And it was a contraction of those two words into one name. Because that's the vision, original vision of Hedera, is to create the ability for anyone to create their own worlds, digital worlds, where they can share, assets, experiences, and so on into their world. But it was hard to explain. And it was hard to explain the connection between the two. When people think of the project today, they think of Hedera Hashgraph, right? Hedera being the network, Hashgraph being the technology. So when we as organizations are matching those two brands, I think it makes it much easier for us today to explain to the market what we do and who we are, because we are using those two brands, Hedera and Hashgraph.
Perfect. So I want to go back in time to your Deloitte experience. From what I can sort of gather, you sort of started and led Deloitte's blockchain team. And I'm just really curious, and I'm sure the audience is curious, what was that experience like? This was, as you mentioned, like 2012, 2013. So it was very early. Mm-hmm. So how would you describe that experience and sort of like the highlights of it?
Different ways to look at it. The one thing that maybe people don't realize when you're in those big firms, by the big four in particular, is Deloitte is a very entrepreneurial culture, right? So if you're a partner in Deloitte, you have a lot of freedom in deciding where you're going to spend your time and grow a practice or a business. You have to deliver, but you have a lot of freedom to do that. And so I was very fortunate to have the right sponsors within Deloitte telling me, you should push for this a few years and see what happens. So I got really good support internally. And I think the market was also there to support our activity. We had clients coming to us saying, okay, what should I do with this? Can I change my loyalty and reward system using blockchain? Can I change my payment system using blockchain? Can I change my, we didn't call that tokenization, but can I tokenize assets so that I can have more liquid assets, and so on. And so we were getting a lot of projects around those topics at that time. So we got good market traction. And of course, because we were spending time in the market to explain we were launching this, we were kind of the first one to invest. So we were getting a lot of attention. But the entrepreneurial culture and the support I got at Deloitte was tremendous. So that's one way to look at it. The other way to look at it is Deloitte is a very traditional business with very traditional reflexes, with large clients. When you do small projects, it's really hard to explain why we do a tiny project as opposed to a big one. So you have to have a lot of energy and passion to continue to sell and continue to demonstrate that we are creating value for the long run. And I think today you can say that Deloitte has, that leadership still there, right? So you have very, very strong people at Deloitte today continuing to support the activities around blockchain of their clients.
I'm also curious from your own prism, how you've seen the industry mature since those days. And I think if you want to speak specifically to sort of the enterprise side, that can be one vector, but there are multiple vectors that you might have seen that have changed a lot.
It's a big question because you have I guess we can split that into three buckets, right? So the first thing is, back then we were talking to innovation teams, right? So the innovation teams were reading documents, reading the Satoshi Nakamoto white paper, and then they were looking for help. They were looking for someone to engage, not the developers, of the core developers, but some business people. Three different ways to look at your question. The first one is, back then we were talking to innovation teams, right? Looking for a friend in the business world to engage on the topic of cryptocurrencies and blockchain. Today, we are engaging with CFOs and CEOs and business units, trying to revamp their business processes or to include the blockchain into a supply chain or capital market platform, right? So very different type of individuals involved. The innovation team is still involved, but now we are talking to completely different.
That's serious visibility difference.
Completely different. That's number one. I think number two is, we do now have what I would call killer apps, right, on blockchain. Back then, we didn't have really something we can point to and say, see, it's working, right? Today, we have stablecoin, we have tokenization, and we have, I would argue, AI. Those three things are becoming the killer apps of blockchain today. So it's actually easier to engage because you can point to those killer apps and say, this is working. Look at it. Look at the market cap of, look at, whatever the number is. So that's a different discussion, right? It's a more mature discussion we're having. And then from a size of the market point of view, today you don't go to an organization when you have to educate them on what blockchain is, right? So back then we were like, okay, so what is blockchain? So that's Bitcoin, right? And I don't know, Bitcoin is for criminals, right? Today you still have a little bit of that, but most of the people we talk to are really aware of what crypto and blockchain is bringing to organizations. So in a way, it's easier because we have a more mature, more engaged discussion, broader discussion, which is very refreshing.
And one thing that I was surprised at just looking at your LinkedIn profile, I saw reference to a number of roughly 1,200 people or so that were associated with Deloitte's blockchain practice. That number surprised me in terms of scale.
Okay.
Is it bigger than that now? I mean, I just think for even somebody who's in the industry, I was very shocked by that number.
Well, so you have to realize that the blockchain team at Deloitte is cutting across different businesses, right? So Deloitte used to have four different businesses, and now it's three. But you have an audit practice, you have a tax practice, and you have a consulting practice, right, to summarize. And so 1,200 was cutting across. And honestly, the tax practice of Deloitte today is still the number one tax team when it comes to crypto and blockchain in the world. My good friend Rob Massey is always, sitting in conferences and talking to clients and serving the biggest crypto projects in the world from a tax point of view. So when you look at this, you obviously, it was not just consulting people. It was across different businesses at Deloitte.
Yep, but still and from my perspective, quite a surprising number. So Eric, I did want to go to your IBM experience. You had a stint at IBM where, I would sort of paraphrase, you were applying technologies like blockchain and AI in sort of the healthcare and life sciences spaces. It reminded me of Watson. Because I hadn't heard the Watson brand name, which is IBM's enterprise AI, in a very long time.
Yeah.
Haven't heard it, frankly, in 15 years since it won Jeopardy against the human champions. As somebody that was involved in sort of selling the Watson Health brand and sort of technology to private equity, what sort of surprised you most about the rise of the LLM companies like OpenAI and Anthropic? I think folks would describe it as it's taken the world by storm, but in a lot of ways, it's not necessarily been an overnight success. So somebody who's been around AI for, a long time, and also enterprise AI specifically with Watson, what sort of surprised you most with the current iteration of where we are with AI?
Yeah. Before I answer the question, I'm going to ask you a question. Do you know why it was called Watson?
I don't.
You don't, because so many people assumed that it was, Sherlock Holmes and Watson, right? The two characters. and Watson was kind of helping. So that was the help to Sherlock Holmes. It's actually not that at all. Watson was the co-founder of IBM, Thomas Watson, and that's at the origin of the name. So I didn't know that either until I joined IBM and Watson Health. So my division were called Watson Health because we were dedicated to healthcare and life sciences. I think the surprise to me, and I do remember that day when I used ChatGPT for the first time in I think October 2022. I think the surprise to me is that the change happened at the consumer level first. And we were all expecting AI to be implemented by large organizations, governments, and to be more efficient, to be more, to save on, activities, to reduce the workforce, to do all of this, right? To engage with clients, right? To do chatbots, all of that. We were expecting the adoption to be by enterprise. And what was very unexpected to me, at least, is that it has been a consumer-led change so far, right? So that was a little bit of a surprise. And of course, the first experience is always unique, right? When you interact for the first time, I'm sure everybody can relate. It is very unique to be able to ask questions back and forth and get really relevant answers. Much better than the search engine, for sure.
Mm-hmm. Might be difficult to handicap. I'm sure like no one has a crystal ball, but when you look out at sort of the AI ecosystem as it exists today, you just sort of mentioned, Watson had really bet, its sort of strategy around enterprise adoption of AI. The hyperscalers, or sorry, not even the hyperscalers, but the LLM model providers of today have obviously gone more consumer first, but I would anticipate going enterprise as well. Like we use, ChatGPT as an example, like internally for a lot of things at Valuation Cloud. Yeah. How do you see that market developing? Do you think that the LLM providers have, an insurmountable lead? Do you think that, enterprise AI like Watson could catch up or even win, frankly, in enterprise AI? How do you see that?
3 ways. The first one is I don't think the LLMs are going to be the one leading the market one way or another, because most of that is either open source or almost free, right? Today, I think the leaders are going to be the one who can build enough power capacity and data centers to serve the demand. So that's where I think the big capital expenditure is today, and that's where the future leaders are going to be, because it's going to be really hard to enter the market, because to enter the market, you need power and data centers, right? So that's going to be really hard to enter the market. So the leadership is going to come from that angle, not as much from who has the best LLMs, I think, right? That's one. And I think two, what's interesting, because we said it started with consumers and it's moving to enterprise. That's not the first time that happened, right? You can think of the iPhone, right? But the speed of which it happened is incredible. Today, I think probably half of the code that we create at Hedera and Hashgraph is supported by an AI, right? And it was 0 2 years or 3 years ago. So the speed of adoption, the speed of impact to enterprise activities is just unheard of. I haven't seen that before. I don't think anyone has seen that before.
It's interesting that you mentioned sort of the consumer to enterprise sort of development arc. And I would argue that typically with most technologies in history, it's sort of been inverted a little bit, right? Because corporations in most instances, you think about the computer, right? The first, organizations that were leveraging computers were enterprises because they were the only ones that could afford to be able to pay for the hardware to even like house them. And they, computers would be the size of an entire room. And then you had sort of over time, things got less expensive and also could be miniaturized in a way that you could put in a consumer's hand, as an example. Now we have an iPhone, right? The one thing that's an interesting similarity between what you just described on the AI front and blockchain and crypto is that crypto also had sort of this consumer to enterprise sort of arc. I mean, if you just think about, Bitcoin, Bitcoin wasn't an enterprise sort of first asset. And, similarly, like blockchain, more abstractly, same sort of thing. Do you see any other sort of intersectionality or commonalities between blockchain and AI that you can kind of draw? Because I just think it's a really fascinating sort of, comparison to make in some instances.
Yeah. The way I think of AI and blockchain together is three different layers of thinking, right? The first one is, in order to have an AI world that is not owned by a single company, we need to have a decentralized structure. All right, decentralized AI. We cannot rely on a single or two or three big companies to own AI in the future. That's way too dangerous. And we cannot rely on one single cloud vendor to host that AI, because that's also very dangerous. All right. So we have to decentralize. And one of the best technologies to decentralize is blockchain. All right. So there is a lot of work being done by different organizations, including us, on how do we decentralize AI? How do we decentralize the sourcing of data, the running of the LLM, the learning itself, the creation of the output? How do we do that? Right? That's the first layer of thinking, if you want, between AI and blockchain. The second layer is saying we cannot let those AI agents go rogue without understanding what's happening. We have to understand what's happening. As humans, not just as companies, as humans, we have to understand. And a good way to understand is to record every single event and trace and be able to audit what happened with an AI supply chain. I'm going to call that a supply chain. And a great technology to do that in a trusted way is to use blockchain technologies. You anchor your AI supply chain or AI agent to a blockchain, and then you can go back and say, this is what happened, this is why it happened, this is how it happened, and so on. So that's the second layer of thinking between AI and blockchain. And then the third layer, which is kind of a more recent discussion, is now we have AI agents. We're gonna hire agents to work for us as individuals or as organizations. And those agents are gonna have to transact with each other or with humans. And in order to transact and exchange value, you need a trusted way to do that. Right? So yes, you can give access to your bank account to an AI agent, but you can also give access to your crypto wallet to an AI agent, right? So that's the other dimension of AI and blockchain working together. And that's why I think AI is one of the killer app for blockchain, because of those three things, right? The three different layers of interaction.
And do you, on that last point specifically on enabling agents to be able to transact on someone's behalf, do you view that as most disruptive as it relates to commerce, whether it's e-commerce or something else, or do you view other functions or categories also being very exposed to disruption with like that concept? Because I think that's a very powerful construct. And so I'm just curious how you see it in terms of functionally or sort of industry-wide.
Yeah, I would not limit that to commerce. I would say this is everything that has to do with payments, right? Okay. So anytime you have to exchange value, the AI agent might actually do that for you. So you can say to your AI agent, over the next 6 months, I want to have a higher exposure to the real estate market in India. Do whatever you need to do that, right?
Uh-huh.
And the AI agent is going to have to negotiate, is going to have to pay and to receive tokens representing those assets. And, all of those transactions, which is payment plus, right? All of those transactions, exchange of value, will have to be hosted somewhere in let's call that a wallet, but it doesn't have to be a wallet, but the agent will have to have the authority to transact on your behalf. So that's beyond commerce.
Got it. Much bigger. Yes, I would agree.
Yeah.
Well, let's jump into some of the areas that Hashgraph is spending the most time focused on. And so you mentioned tokenization as sort of one area. Obviously, you guys are also very involved in enterprise adoption, as I would describe it, sort of more globally. I think let's start with like how you would describe or handicap enterprise adoption today in blockchain. Where are we? Like what stage of the game are we relative to that? And have you seen it accelerate just with some other, sort of macro level events that we've seen?
Yeah. I like that question a lot because I've been through that, over the last 12 years, right? The evolution of that market. And so some things didn't change from 12 years ago, but some things are really different today. I think, and it's interesting because I usually argue with my, competitors, because some of them would disagree. But what I'm saying is the layer one or the layer two, the fundamental base is going to be less and less relevant because the technology improves dramatically over time, and many blockchain in the next 5 to 10 years are going to be really good. All right. We're going to have a lot of options to do what we need to do when it comes to, using a trusted network for whatever the use case is. So yes, we do have a little bit of a unique positioning today as Hedera. We have, very high performing layer one, which is rare. Usually you find the same performance as a layer two. We have really good performance as a layer one. We are the greenest blockchain because we consume very little energy. We have proof of stake with a limited number of stakers, which are the council I mentioned earlier. And we do have a business model, if you want, where you pay transaction fees, which are really low, but you pay in US dollars. You don't pay in crypto. So regardless of the value of H bar moving up and down, your transaction cost is still going to be the same in dollar. That's how you build real business, because you actually know how much you're going to have to pay the blockchain in the future, right? And that's a differentiating factor today. I suspect that in the next 5 to 10 years, many people will have the same capacities. We also have fair ordering, which is really important in capital markets, for example, that is very rare to find in the blockchain world, right? Making sure that no one can front run you in the flow. We do have that embedded into the technology from the very beginning. But again, I don't think that's going to be a significant difference 5 years from today. It is today, but not in 5 years. So we have to continue to increase the value we provide to the enterprise. The main reason, to your point, the main reason why enterprises are not investing today or not adopting today is because they think it's too hard. It's too complicated. So we need to build abstraction layers on the top of blockchains. And many of us are working on that, right? Not just Hedera, but abstraction layers can be, think of that as middleware for, the Web 2 world, right? That's kind of the idea, is to say you need, a bunch of tools that are going to help me tokenize an asset, create a stable coin, operate identity, anchor an AI agent. And I can go on and on, right? All of those modules that we have to build on the top of blockchains are critical for adoption, because now when you're an enterprise, you're going to come and you're going to say, oh, I already have, half of the work is done. I just need to build my own, proprietary business workflow expertise on the top of this and benefit from the entire stack. I don't have to recreate everything, right? Similar to what happened with the cloud, right? You don't have to buy a data center, power a data center, buy servers, run servers, hire a team, all of it. You benefit from what those cloud providers are doing. You focus on the top, right? Exactly the same. So we are in that journey in the blockchain space where we are going to be really good at the foundation. Many of us, I would argue we are ahead, but I'm biased. And then the next, battle, if you want, is that layer of abstraction. If you are able to do that, then you're going to get a huge amount of adoption by the enterprise market.
So let me ask you 2 follow-up questions there. One is just based on like human psychology within sort of the enterprise leadership vector, which is, I think there's 2 reasons people do things, like either it's fear or it's opportunity. What do you think is driving most C-suite folks that are considering blockchain as some sort of initiative they want to launch? Is it because they're worried that they're going to be behind on the technology or some other reason strategically? Or do they view it as like a very big, opportunity unlock for them, whether that's more revenue, whether that's cutting costs, could be anything. But like from a psychological perspective, what do you think drives most executives as they consider blockchain?
I would categorize that in maybe a little bit different than you do. I think you have the FOMO group.
Yep.
Who's saying, I don't understand what's happening, but I need to get involved. Right? Because if I don't, I take the risk of being behind. Maybe that's what you said, right? The risk side. I think that group is shrinking dramatically because I think all of us in the industry have done pretty good work educating the market that, yeah, it's a great innovation. It's a great change. It's a real innovation. But it's not that hard to engage, and anyone can benefit. And point number two, the business cases are now real. Now we can deliver either revenue or efficiencies on the top of blockchains, because you can run what you used to run for, $100 million, you can run on $20 million, right? On a blockchain platform. What you were stuck with legacy infrastructure, you don't have to be stuck anymore. And you can actually build a new business model on the top of a blockchain system, because the technology lets you do that, right? So I think it's hard to say, to generalize, because every enterprise is different. Every culture of every enterprise is different. You have organizations who came very early. I remember when I was at Deloitte, very, very large organizations that you don't expect to be innovative came to us and said, how do I benefit from this technology? I can see something is going to be there. What do I need to do, right? Do I need to change my payment rails? Do I need to build a new platform for collateralizing assets? Do I need to change my loyalty and reward platform, right? It was very strategic questions. It was not, FOMO. It was really, really strategic. So we still see that. Just now the volume is much, much bigger than what we used to have, 10 years ago. So I don't know. I don't know if I can answer really your question, because it really depends on the organization. And by the way, it depends on the country too.
Totally. Yeah. And we'll get to that maybe also. Just sort of, I'm curious about your take on like regulatory evolution. But just, going back to sort of the transformative potential of tokenization, Eric, I do want to ask you a little bit about, is tokenization a technology problem that needs to be solved? Is it primarily a regulatory problem that needs to be sort of like overcome? Or is it a data standardization problem that needs to be overcome? Like, how do you see sort of the friction to tokenization becoming like a real, sort of like category?
Yeah, I love that question, because to your point, I think people think of tokenization as a technology issue. And I would argue today it is not at all a technology issue. You have 20 options to tokenize your assets today if you want to. And many of them are really good, right? We have a tokenization studio at Hedera that Hashgraph built, and that studio lets you start tokenizing assets in a matter of minutes, right? It's a really easy engagement level. So the technology is there. There is no reason not to do that today from a technology point of view. The regulatory framework is important, right? Because when you think about tokenization, let's take an example. You want to tokenize real estate, right? That's a typical example. Mm-hmm. You tokenize, a multi-family project, right? $200 million. You tokenize. Now everybody can invest into that project $100 at a time. But oh, wait, that investment is a security. So I need to be accredited investor if I live in the US, right? So suddenly your market for selling that token is shrunk to a tiny market, because it's only accredited investors. Guess what? The accredited investors are not going to spend $100 on an investment, because it's not efficient for them to say, I'm going to spend my time on investing $100 at a time across different things. Then I have to track, I have to pay taxes, I have to do all of this. So they're not interested, right? Uh-huh. So, but it's nothing to do with the technology. It has to do with the fact that those tokens cannot be sold at a retail level in the US market, right? So in the US, tokenization is a regulatory issue. Unless, and that's a recent development, unless you can actually tokenize securities and buy those securities on an exchange, on a traditional market like you do today with equities and bonds, right? So you buy, Apple stocks, you do that through a broker. If tomorrow you can do $100 worth of real estate through that broker, fine, I can do that too. So that's happening, right? But it's not about technology, it's about regulatory environment and the market structure to give you access to that security, assuming that tokenized asset is a security, right? So that needs to happen way more than the technology stack. That's the US market.
Got it. And you sort of reframed my is AI agents just impacting commerce. And it's like, no, it's payments and the movement of money. Similarly, with tokenization, do you think that the market, enterprise or otherwise, views tokenization too narrowly? And by too narrowly, I mean just a wrapper for existing assets. Or do you think there's a way to sort of redefine how value is created in the first place or moved?
I think on the first side, I would say, even if you do just wrap your existing assets and you tokenize them, you're still creating a lot of value, because now those assets are going to be tradable 24/7. Now those assets are going to be exposed to investors outside of your traditional channels of distribution. So even if you just do that, it creates a lot of value, right? So that's enough to do it. So don't wait for anything else to do it, is what I'm saying. Now, sometimes we are saying, okay, let's think about tokenization as a bigger play and not use existing assets that we're going to repackage, pretty much, right? Tokenization is a repackage of assets. But tokenize things that we don't tokenize today or we don't sell today, right? So you can tokenize, art and then let people invest in art, in remote places. But you can tokenize identity. You can tokenize your AI agent, right? So the other day we were working on this topic. We are like, okay, we are creating agents that are very valuable. I'm going to tokenize them, give access to individuals to use those agents. And I'm going to benefit from them using that agent by receiving tokens every time they do, right? They're going to pay this agent and I'm going to get a piece of that. So in a way, I invest into an AI agent providing value to an ecosystem, and I get the value because I tokenize that agent in the first place. So that would be more on the second part of your question, new things you can do because tokenization is available. And not just available, it's actually really easy and cheap to implement, right? Because many things are available, but very expensive. This is not expensive at all to tokenize an asset.
Mm-hmm. I want to move to what Hashgraph has been able to achieve and accomplish by, sort of announcing and launching Hashsphere. Do you want to give the audience just a little bit of background on Hashsphere, what you all are doing with it? I think it's just a great segue into, everything we've been talking about.
Yeah. So if you're in the blockchain business, very often you go talk to the enterprise market and they say, oh my gosh, this is fantastic. The tech is awesome. I love the way you govern the network. It's, the big brands behind you, credibility. I trust them. So we are in a really good position. So we go all the way through that discussion. And at some point they say, but are you a public or a private blockchain? And we are a public blockchain. We are a permissioned public blockchain, right? And they say, oh, well, hold on. I can't touch public blockchain. That's not possible. I have data residency issue. I have regulatory framework I need to comply to. I have participants who will not accept that anyone can see the fact that we are transacting with each other, right? Mm-hmm. Not the actual transaction, but the fact that we are transacting. All of that I can't deal with. So we were losing opportunities because we couldn't deliver what the clients or the networks were looking to do. At some point we said, we need to create this private network. We need to say that you can benefit from the entire stack of Hedera, the entire ecosystem in a private setting with a bridge to the public network if you need to, right? If you need to communicate between your private network and the public network, you can, but we need to deliver that solution. And we called that Hashsphere. We launched that officially in beta 2 months ago, I think now. And now we are capturing clients and opportunities that we couldn't before. So this is a gateway for them to engage with us and build something of value to them, compliant with their regulatory environment. And over time, we expect them to benefit from the public ledger, but also maybe merge into the public ledger because they're going to realize that there is no need to have a private and a public ledger anymore, right? But today we have to do this because we have to meet the clients where they are. And where they are is they need a private network.
And when you think about this is sort of the classical argument of public blockchain versus, sort of private environments. And so I'm just curious how you see this settling out sort of like long-term thinking about, if we're sitting here 10 years from now, do you think that there is always going to be a need for a certain set of use cases in industries to live in more private environments? And if so, which ones? Or are we going to be living in a world where things are mostly public and there are going to be some small walled gardens? How do you see it?
I mean, it's clearly not going to be everybody on public ledgers for doing everything. It's unrealistic to expect that, right? It's foolish. I would say it's foolish. The same thing you would say back in the day when I was a student. We were talking about the intranet and the internet, right? And we were saying, okay, I don't want to be on the internet. I want to protect my own thing. And people said, oh yeah, but over time everybody's going to be on the internet. It's true, but you still have the need for private environments and private networks. Some of them virtual, most of them virtual today. But you still need that. You still need this construct of protecting privacy, transactions, business models, right? All of that is still needed. Even more when you start exchanging value as opposed to exchanging data, which is the internet and the internet. So I think it's foolish to think it's going to disappear, that need of privacy. What's going to happen is we're going to be in a hybrid world. We are already, I would argue, right? But we are going to be even more in a hybrid world over time because we're going to need both at the same time. Everybody's going to need both at the same time.
So let's talk quickly about regulatory and macro. So, we talked a little bit earlier where we referenced, there's been some increasing regulatory clarity, especially in the US. We just had the Genius Act pass as an example, but there's more in the offing, so to speak. I'm just curious from your perspective and where you sit, is there a regulatory blind spot that you think enterprises and or governments have that they're drastically underestimating, either on like the AI front or on the, it's called tokenized asset front?
A blind spot in the term of them not paying attention to something?
Like they're missing something that's sort of like the really big thing that they're not really focused on, but they should be.
Interesting. I don't think so. I think we have to give credit to the regulators who are working across the globe on those topics. They understand the industry, but sometimes they don't act on to the benefit of the industry. It doesn't mean they don't understand the industry. It means they don't want that industry to be enabled by a government framework. But it has nothing to do with them not understanding. I think it has to do with them not being comfortable with the impact, the social global impact of those technologies, right? So when you think about blockchain today, you think about payments, you think about what does it mean for central banks? What does it mean for regular banks? Commercial retail banks. What does it mean for payment networks? What does it mean for jobs? What does it, and so yes, they probably understand really well what blockchain and crypto today, what blockchain and crypto is, but they are looking at it in a very different perspective. And they say, hold on, we need to understand the impact of this before we activate all of this, right? So I don't think it's a blind spot. I think it's more of a choice that they are making, right? But we are very optimistic about the clarity coming in the US, right? Between the Genius Act and the Clarity Act, those things are going to create tremendous amount of clarity to the industry and by extension to the rest of the world, because typically when the American market is getting clear on a technology, it tends to spread very quickly across the globe. I have to say Europe, and I'm not saying that because I was born in France, but Europe has a very good framework from a regulatory point of view with MiCA, hard to implement because it's a lot of things to implement, but it's very comprehensive, which shows their understanding of the market. Again, they're making choices, right?
So let me ask another difficult question. If you could pick one thing for industry outsiders, so this could be regulators, this could be folks that are blockchain curious, one thing that you would, if you could force them to unlearn about what they believe or perceive about blockchain that you think would be helpful for them to sort of,
I think that's an easy question, actually.
Really? Okay.
Yeah, it is an easy question. It's forget about crypto. Right? I think that's what they need to unlearn. They need to unlearn that blockchain is just about crypto. Blockchain is much bigger than that. It's actually creating a trust layer for anything that we do, human activity, corporate activity, government activity, That's what you need to focus on. And yes, sometimes you need a cryptocurrency to fuel that platform, that trust layer. But forget about that's a detail, right? It's like you need packets on TCP/IP for email to go from one point to another. Yes, but don't focus on that. Focus on what you can do with the trust layer, right? That's really what we need to continue to push.
Right. As Ben Horowitz would say, the productization of trust is really what the technology is all about. I thought I was going to stump you, but you had one really ready that was good.
No, this one. Try again.
Try again. So, Eric, our last question that we ask all of our guests is to provide their high stakes hot take, which is, what is your boldest prediction for Web3 or AI over the next 12 months?
12 months. I was about to say in 5 years, we're going to make fun of assets that are not tokenized, right? Oh. We're going to say, oh, look at this asset over there. It's not tokenized. I don't want to touch it.
Yeah. It's going to look like analog.
It's going to look like a fax machine, right? It's like, what is that thing over there? Right. In a year, it's a little bit shorter term. I think we are underestimating the tokenization of assets. In terms of volume, I think it's going to accelerate dramatically between now and a year from now. So if you're in the business of building, for example, the infrastructure of tokenization, right? Not just the technology, the regulatory framework and all of this, I think that's where you need to spend some time today. I would spend a lot of time understanding what needs to happen for an investor in India to invest into a mutual fund in the US, $100 at a time, in under 3 seconds, right? That's what you need to focus on. To me, that's what's going to happen, and at scale.
It's really exciting.
Yeah.
Well, we'll have to park it there.
Yeah.
Eric Piscini, CEO of Hashgraph. Eric, thanks for coming on. I really enjoyed the conversation.
I did too. Thank you very much for having me.
Absolutely. Keep exploring and keep innovating. Learn more at validationcloud.io and follow us on X and LinkedIn to stay connected as we continue to shape Web3 for institutions. This is High Stakes with Alex Nwaka, signing off.